Hello and welcome everybody. This is Cheston Bulgin with By the Books Consulting, your accounting superhero, and this is the next installment in our series of videos to go over how you can eliminate business bookkeeping headaches, specifically if you're using QuickBooks Online. And in this video, we're going to go over adding the chart of accounts specifically for your asset chart of accounts. And I want to just say here that it is super important, again, to have the organizational structure of your chart of accounts planned out and understood from the beginning. If you don't know what chart of accounts are, this is the organizational structure through which all transactional activity flows, and money comes in and out of your company through your chart of accounts. So money flows from one account to the other. You cannot have any type of understanding of your financial transaction history or reporting or performance without having an understanding of where things are coming from, where money is coming from and where money is going to, where value is coming from, where it's going to inside of your business. So this is an essential foundational part of your bookkeeping and financial tracking and reporting processes in your business. And you'd be amazed about how many business owners don't take the time to really get this understood, planned, and updated on a continual basis. And when I say update on a continual basis, really once this gets established in the beginning, you plan it in the beginning and you understand it in the beginning, it wants to be reviewed at least annually to make updates. It also wants to be updated when you add new accounts or discover new accounts that your business has. Specifically when, like if you're opening up a new bank account with another institution, or with the same institution, or if you're opening up a new credit card account or a new line of credit, those things want to be added as soon as you make those decisions in your business to make sure that your chart of accounts are reflective of your business financial reality. Okay, so let's just say in the beginning here, you're running your business, you have these accounts that you've opened up, and you want to make sure that you are eliminating all of your bookkeeping headaches. So number one, we want to have clarity. We want to have organization inside of your money flow, inside of your transactional flow. In order to have that, you want to have your bookkeeping chart of accounts reflect the exact accounts that you have in real life, no more and no less. Sometimes what I'll see is that people will forget to add certain chart of accounts, like if you buy a piece of equipment, which we're going to go over in a little bit, it's neglected to update the chart of account with that new asset that's been added to the chart of accounts, which is super important to do. Or the other thing is that people will add on to their chart of accounts things that really don't exist in reality. Like they have an account they want to use to track maybe taxes on their financial chart of accounts. Really, you want to understand how much you're saving toward taxes in your chart of accounts, and instead of just creating another structure that you can utilize in QuickBooks called envelopes, they go and create a whole new bank account on that chart of account that does not really exist in reality, which could cause further confusion, balance sheets that don't reflect the true reality of your business in real life. I'm not saying that you can't do that at all, like adding these chart of accounts that don't exist in reality. But if you do that, you really want to understand that setup. You really want to be good at the organizational tracking of those other accounts so that it's set up in a way where it's still going to reflect the complete reality of the business. All right. I don't recommend it, like adding chart of accounts that don't exist in reality. What I do recommend, however, is to have real accounts that you're using in real life for your business to be on your chart of account list, nothing more, nothing less. So this table here serves to help us have that organization in the chart of accounts so that nothing more and nothing less shows up in our business bookkeeping processes than it does in reality. So if we take a look at this table, the headers in our columns here for the tables that we have, they are mapped to the fields that you would have in your QuickBooks Online software. Okay, so this first column is for chart of account coding. Now, you may not have this turned on, the numbering turned on in your chart of accounts in QuickBooks. If you're not familiar with this, it's okay. You don't necessarily have to have this. We do have this because we like to keep the organizational coding per what we do with the clients that we work with. And it really does help to have the chart of accounts flow on a financial statement in an order that gives us insight on how the company is financially performing in the way that we want to see it. And this next column here is for the account name. So if you have a Chase checking account in real life, like in the example here, it would show up in the account name of it. And we'd want to have the last 4 digits of that account number to associate it with that account so that it's distinct on the financial chart of accounts. And then we have the account type, whether or not this is a bank account detail or something else. And then we have the detail type. If it is a bank, then it's going to be reflective of either a checking, a savings, or a money market account. Sometimes we'll look at, cash on hand type accounts and everything else inside of QuickBooks. And then the last column here, we have a field map to the description, which is going to be key for you to understand, and everybody else on your organization to understand that, well, how is this account going to be used inside of the company? All right, so this is really good for you to get clear on what accounts you have and what they're going to be used for. Super important to get that logically structured inside of your mind so that you have an understanding of your financial and reporting and tracking, financial tracking and reporting for your business. Okay, so the idea again is to eliminate a lot of the bookkeeping headaches. In order to eliminate a lot of the bookkeeping headaches, it would be super important to do this up front, to have an organizational flow to the accounts that you're using for your business. All right, so the next step here is to make sure we're adding the accounts that you have. This is an example that we're looking at here. Let's say that these are the checking accounts that you have in reality. For example, I have in the account name column here a Chase checking account 000, and then I have a Chase checking account 0001. These will want to be real accounts, nothing more and nothing less. Again, if you are adding a checking account onto your books, if you're adding a checking account in real life, you want to add that checking account inside of your books as soon as possible as well. That way you're updating this so it's reflective of the financial truth of your business as soon as possible. Okay, let's say that you have your checking accounts added. These are only 2 checking accounts that you have. The next stage of the process is to understand, well, how are you going to be issuing funds to your shareholders or your owners? There are 2 sides of this, and we're going to talk about equity in another video in more detail. A lot of times we'll have like owner distributions, owner draws from a business, which basically means that you're going to extract money from the company, and it's money that you get to keep and use for your personal expenses, everything that you would need to manage, the flows of your inflows and outflows of your personal life. So you would be able to take a distribution from your business if you're a partnership or an S corp. Now, a lot of the times you don't have enough in the business in terms of what we call basis or equity in the business to take a distribution, right? There's not enough equity in there for you to take money out. So you want to understand what that's going to look like for your business and have a strategy for either issuing a loan that's going to be paid back by the shareholder or the person that's being loaned the money, the owner that's being loaned money, or if it's going to be a distribution, then if you're going to have ample equity in the company to take a distribution out and not have a loan repayment. Okay. Now, you want to get with your professional to understand what this is going to be for your business, to have a strategy around it. But you also want to be clear right now for yourself, well, how do you want to manage money that comes in, really that comes out of your business, rather, in this segment, for your business, to the shareholders. Money that comes out of your business and goes directly to the shareholders. Let's just say for this example, you're going to decide to have money that comes out of the business and goes to the shareholders or the owners of the business or the officers of the business. We're going to treat that as a loan to be repaid at a later date. Okay, so you want to have this chart of account on here so you can track that loan. Now, if you're going to have different shareholder accounts that are being issued loans, we want to track those as well. So if you have just more than one, we want to put more than one on here. If you have just one, then like this, you just want to have one on here. That way you can track distinctly, well, how much do I have loaned to each one of those shareholders? How much has been paid back? And are the terms of that agreement being honored? Right? It'll go a long way with you keeping track of that arrangement and staying organized and very clear. Okay? Now, the other thing is, I see a lot of businesses, specifically even in the trucking industry or the construction industry, they like to give their employees cash advances. And if you do that, well, this is a real good time to put that account on the book so that you can track what employee cash advances you have out there and what has been repaid and versus what has not been repaid. So you want to have an account to track that too. Right? So loans to employees, which would be cash advances and how they get paid back. We want to create that chart of account as well. Right? So now you can start to see the level of thought and intentionality that comes into designing your chart of accounts. We're just on the asset side, guys. All right. Now, there's so many different assets that we can start talking about here. Really what I want you to get out of this section is to take account of what real accounts you have in real life, like bank accounts. And then what are the type of outflows in your business that you expect to make, where you would also expect to have somebody repay those outflows in terms of loans. Okay. And then there are going to be more things along the lines, guys, that you can think about. This is just an example. I want you to start really getting into the framework of organization and intentionality when it comes to creating your chart of account. Next, we're going to talk about fixed assets or plan asset chart of accounts. This deals with capital expenditures. We want to track these in a specific way. It's okay if you're not familiar with capital expenditures. Basically, what this means is that we're purchasing or investing in equipment, machinery, vehicles, real property like real estate or land. These assets are going to be deployed in our business to generate revenue or more value in our business over time. Okay, so this is where we're going to record that on our chart of account. We want to take inventory of what it is that we purchased with regards to these type of capital expenditures. For example, if you own a construction company, you may have purchased a dump truck to be used in residential construction projects or a backhoe or something similar. And you want to record those purchases, those capital expenditures on your balance sheet so that you have, number one, an accurate depiction of the valuation of your company, but also have access to key performance indicators that will let you know how healthy the business is overall. Now, if you're asset intensive, which means that you've invested in a significant amount of equipment and machinery or vehicles in your business. For example, we have companies that have 50 or more units of trucks that they purchased on their fleet. Well, then it makes sense to create either a generalized category fixed asset account to maintain the integrity of the value of those assets all in a lump sum, or create some type of parent and sub-account structure so that your balance sheet isn't going to be pages and pages and pages long when you really just want to see how much value you have in the assets overall financially in your business. Okay. Now, I'll show you in a minute how that looks inside of QuickBooks when we add those details. But right now, I want to go over some of the other key plant or fixed asset accounts that you want to have listed on your chart of accounts before we get into it. So one of the other main accounts that we want to have on our fixed asset chart of accounts are accumulated depreciation and or amortization, depending on the nature of that asset. Okay, so if I have accumulated depreciation, So basically this tracks how much of the fixed assets have been depreciated over time. So you take a certain amount of expense over a period of time for the assets that we purchase. This is going to keep track of that so that we have an accurate depiction of the book value of all those assets. All right. Now, if I can just confuse you, it's okay. You just want to know that depreciation is important to track on your balance sheet, chart of accounts, to maintain the accurate value of any investment you've made in fixed assets. Okay. All right. So let's move into something else. Let's show you how to do this on QuickBooks. Okay, this is a sample company, and what we're going to do here is I'm going to use everything that you saw on the spreadsheet in the previous screen. We're going to transpose those onto the chart of accounts here in this sample company in QuickBooks Online to ensure that everything that's representative of the reality of what we create on the spreadsheet shows up here on the reality in the books. Now, the thing with the sample company is that it comes with pre-populated data. Some of you guys are dealing with this inside of your bookkeeping, where you have already existing information that might not necessarily be accurate for your company. And I'm going to go through the process of just restructuring that right before your eyes so that you can see how to do that in the event that you already have information already entered in your QuickBooks that just doesn't reflect the true nature of your business. So we're going to line that up right now. For example, we have this checking account here and the savings account here. In our spreadsheet that we used, we have these accounts. We don't have a savings account. We have an operational checking account. We have a payroll checking account, but we don't have a savings account listed. We also have this loan to the shareholder. We have employee cash advances that we want to track. Okay, and if I'm looking at this QuickBooks account, there are a few extra accounts that are showing up here. There's accounts receivable. This is a default account. This is going to show up on the books, and most likely, if you have invoices, if you're a trucking company, if you're a construction company, you're going to have invoices that are going to be used in your business, and this default account will be here for your chart of accounts to record how much people owe to you for these invoices. Okay, so that's going to be default. That's going to stay. Inventory, you can see here that, like, most likely if you're running a business where you don't really use inventory, you're going to want to get rid of this account. We can't get rid of it because there's a balance here. So we're going to go through the process of just showing you how to eliminate some of these extras on the books. Okay, so let's get into it. First, I'm going to go ahead and correct these chart of accounts here. I'm going to edit these to make sure they're updated to reflect what we have on the spreadsheet. All right, so that's going to be updated there. It's going to save that. And we're going to go in here and edit this account too. And by the way, guys, if you want to do this on the fast track way, you don't have to do it line by line like this and go in and out of your chart of accounts like what I'm doing here. You can simply hit the edit icon and batch edit these. I'm going to do that now just for the sake of time. I'm going to go ahead and change this because we have on our spreadsheet, we have a dump truck. I'm going to add that right now. And you can see here it has its original cost and depreciation. This is what we want to use for our chart of accounts whenever we're adding a fixed asset. We want to have the depreciation, which is what we saw on our spreadsheet here. It's the accumulated depreciation. And the way that we separate that in reality on the books is that we want to maintain the true value of that asset as we move forward in time. The way to do that is to record how much it cost up front as an original cost, and then the total amount of depreciation taken for that asset over time. The net of that will equal the book value. So we want to put that on there so that we have that valuation accurately depicted at any given point in time. And the way that shows up is through depreciation. Okay. Now you notice that I skipped over a couple of things here. I skipped over inventory. I skipped over undeposited funds. I skipped over uncategorized asset. All right. So these are also default accounts inside of QuickBooks. Like this one here is to track when you're doing your books, and we'll talk about those when we get into more site. So the transactional videos, how to classify and the transactions inside of your business. We'll talk more so about the uncategorized asset and uncategorized expense accounts and how they're used inside of QuickBooks. And also this undeposited funds account. You also say it'll also be named payments to deposit. That might be another name that you see here. That's also a default account when you're collecting payments from customers that haven't yet made it down to the bank account or haven't been deposited into your bank account yet. Okay, so we'll talk more about those accounts when it comes to transactional flow. And the inventory, of course, I skipped over because it has a value in here. Maybe you don't have an inventory account on your books. The idea, guys, is to make sure that your chart of accounts are cleaned up to reflect exactly what you're using for your business, nothing more, nothing less. Okay. So that would be all the assets that are here that we just edited to reflect what we need them to reflect. So we're going to go ahead and save that. And then if you notice, the detail type for this account here is not lined up with the checking account. It actually says savings account. So I'm going to go ahead and correct that. Detail type, couldn't do that detail type inside of the bulk edit feature, but I'm going to do that right now. So I'm going to just edit this to be a checking. Okay. And save that. Awesome. And then if we look, I want to go back into this account here for the checking account, and I'll show you again because we want to ensure that the description lines up with the description that we have for our spreadsheet. So this is operational bank account. We want to put that there in the description on QuickBooks as well. All right, so let's go back and correct that. Save. And I'm going to do the same thing for the other account. This is supposed to be the payroll account. So we're going to go ahead and edit this and create this as a payroll account. So, okay, now we're going to go ahead and add the accounts that are missing for this. So, for example, we have a dump truck here with the fixed assets and its vehicles. So we're going to add the other piece of equipment, which is another, this is a backhoe, Caterpillar backhoe. We're going to add this. And the way that we add them is come here and hit new. And I'm going to give it account name. It's going to be the Caterpillar backhoe. And what's the VIN on that? 3259. We're going to use that. And this is going to be machinery as a fixed asset type, and machinery equipment is what we're going to add here. And we're going to track the original cost. And let's say that the original cost, you got this maybe last year, or sometime. Let's just say you got it about a year ago. Okay, and the cost of that was $50,000. Okay, and let's just say that you have $10,000 of depreciation taken, really $5,000 half year, as of December 31st of last year. Okay, and this is the description that we use is I believe we have residential contract site backhoe. Okay, and you saw me, I checked this box here. I did check that really quickly. This is to ensure that those sub-accounts get added to track the original cost and depreciation of the asset. Okay, that's a default feature that's available inside of QuickBooks as long as you check that box. I'm going to go ahead and save that. And now you see we have that. We have that added, the backhoe. Okay. Now what you did notice is that the accumulated depreciation and original cost didn't show up. We'll be able to refresh and add those. And now that we refreshed it, you see how that's added. Okay. And this is what I was talking about, so we can maintain the asset valuation accurately on the books, so we know how much the asset is worth on the books. This will go a long ways to when you're looking to sell your company and you have book value of the assets and the market value of the assets that you're tracking on a separate, maybe on a separate spreadsheet, so that you understand, well, how much is your company worth? How much can you sell it for? How much has that value grown over time? It's important for you to be able to track that here by entering this information on your chart of accounts. Now, let's go to the balance sheet. Let's refresh that. So when we go to the balance sheet, what we want to see on this is we're entering our chart of accounts. We want to make sure that the ones that we're using for our business are showing up and nothing else is showing up outside of the ones that we're using for our business. All right, so again, inventory asset is showing up on here, and most likely you haven't really been dealing with inventory assets in your business. This may have been an error. Maybe there was a misclassification of things. Maybe you've been dealing with that inside of your business, how things get misclassified and they go to categories, chart of accounts that you really don't even use for your business. Sometimes that happens. Okay. Now, with inventory, the way to get rid of it, if you have this feature turned on, like you would need a QuickBooks Online Plus or above to have inventory tracking on. So there's a inventory quantity adjustment that you would want to do to remove this. I'm not going to get into that detail in this video. What I really want you to understand, instead of just taking the time to go through this process, I want you to understand that when you see things like this on your books, you want to go through the process of eliminating it so that it's not showing up on your financial reports, misrepresenting the assets you're using in your business and not really giving you an accurate depiction of your company value, your company worth when it comes to the balance sheet. Okay. So I'm hoping that this video was helpful. And I do want to make sure that that's not something that you're going to keep pondering. So let me just complete on that before I move on and close up this video. All right. So if you did have a situation like this with inventory asset, you would need to go ahead and make a quantity adjustment to get rid of the value, and then you would be able to deactivate the account. All right. But we want to get rid of that value first. That's how we would get rid of it and change it up. Okay. And we want to do that to ensure that we're getting the accurate depiction of our business when it comes to the balance sheet. Okay. All right. So what I want to leave you with in this video is how to set up your chart of accounts. Make sure that we take the time to strategically plan out what you're using, what you're deploying in your business when it comes to these current and fixed assets. Map them out on a separate spreadsheet for best practice so that you're clear beforehand, before you go into QuickBooks and start adding or taking away chart of accounts, so you're really clear on what accounts are being used, and then start mapping them out inside of QuickBooks. All right. So what we did here was we just started mapping out the checking account, and we started mapping out some of the fixed assets. However, we want to continue that process to go ahead and map out the rest of these in the process so that we're completely clear that we have everything that we're utilizing and deploying in our business on those chart of accounts for assets and current assets and fixed assets. All right. So the next step would be to go ahead and add the loan to the shareholders, then add the employee cash advance. And if there are other chart of accounts that you discovered in the process that you're using for your business when it comes to current assets and fixed assets, you want to add those as well. And then last but not least, if you're a company that's intensive in their investment into fixed assets, which means that you're having a significant number of fixed assets on your chart of accounts, the recommendation is to create a generalized chart of account to handle the valuation of those assets so that your balance sheet isn't going to be tremendously long. And what I mean is, if you go back here to your balance sheet, imagine that I had hundreds of different assets that we purchased in the business, and each one of those shows up on this balance sheet. This balance sheet would go on forever and ever and ever. But if that's going to be the case, the strategy would be to create a generalized chart of account for machinery and equipment, a generalized chart of account for vehicles, and a generalized account for accumulated depreciation of those pieces of machinery and equipment, and maybe a generalized account for depreciation of the vehicles, so that your balance sheet is not going to keep going on and on and on and on and on when you really just want to get a real quick snapshot of the valuation of the entire asset amount in your company. Now, if you need assistance with this, you want to come up with strategies, and you feel you need some help with somebody who knows what they're doing with this, you're definitely encouraged to use the information in the description of this video to book a call, book a strategy session with me or a member of my team, and we will help you go over the strategy of this. Maybe we'll get you set up on an engagement where we can do it for you. But the idea is to make sure that you're set up to win when it comes to creating your chart of accounts all the way around. All right, guys, thank you for watching. If this video was of value to you, please like, give a thumbs up, and subscribe if you're not a subscriber already. Thank you, and I'll see you in the next video in this series. Take care.